Hello. I think I'll get started now. I was giving it a minute or so extra. I know there was a bit of an error with the kind of link that was originally sent out last week, so just making sure everyone can find the right one and can connect up. And I see some kind of familiar faces on the call. And then for those that don't know me, I'm Sam. I head up the account management team here at Futrli. And today we're going to run through how to forecast for kind of COVID assistance. So everything from CBILS, bounce back loans, Vat Deferment. We're going to work into Futrli Advisor and then build out a bit of a report to give a client some insight as to what these measures can do to their business. Obviously, as you can see, I'm working from home, as I'm sure the majority of you are as well. Obviously, first day of new lockdown actually today, isn't it? So maybe more are working from home than were the last few weeks. But because of that, standard sort of home housekeeping, I suppose. I do have a small little dog that likes to interrupt and go a bit crazy when is not required to do so. But my wife's on kind of dog watching duty, so hopefully she kind of manages to keep him under wraps. And if we do drop out for whatever reason, which hasn't happened yet, I do always say that, so some point or another that will be the kiss of death, but we'll just restart it again. Hopefully that doesn't happen, touch wood. And I will send out a recording as well of the session, so you should have that as well as any material that we go through. So for example, we've got a really good CBILS guide, which you might have already seen, but I'll reshare as well as any material that I think would be useful for today. We do have a Q&A function, as I'm sure you know and have used, but certainly use that in the Zoom option. I'll probably come to them at the end of the session, but the session probably won't need the full hour, to be fair. We've got the full hour booked out if we need it, but we're probably looking at half an hour, 45 minutes, to be honest. But yeah, hopefully we'll have time for Q&A. First bit we'll be going through some measures and techniques and tips and things in Futrli Advisor, and then we'll come on to any questions that might come off the back of it. So I can see a few others trickling through, which is good. So I'll just kind of get started, and we'll go from there. Cool. So hopefully you can see my screen now. And this is just my kind of Futrli Advisor account. And when you first log in, if you're going to be working with a new client that isn't connected yet, we'll go down to the organizations here. This is where we can then connect that client up. So click Add Organization. We'll then have all the options that we have to be able to connect that client to our Futrli account. So we've got Connect to Zero, QuickBooks Online, Manual Organization. If you're working with a client that's not on the cloud, you can upload that yourself. It works exactly the same way once it's in there. You're just effectively doing the upload. MYOB, if you're kind of one of our Australian friends that are joining in the middle of the night, then MYOB is the one for you probably. Sage isn't coming soon, unfortunately. That is going to be removed soon. So if you are working a Sage client, it will be the manual option. And we've then got the create consolidated organization. So if you're working with like a group of franchisees, for example, or a group of restaurants or something, you can consolidate it and you can forecast from that, and you can also report on it and do whatever you need to. But probably a lot of you are going to be working with these two guys. Simply connect. Takes a couple minutes to sync, depending on how big the organization is. You then see it will say here is synced. Yours will be more regular. Mine are obviously examples here, which are kind of a while ago they were synced. But yeah, that will sync automatically every day. So you won't need to hit sync now. Unless you do an update in Xero or QuickBooks Now and you want it to come through now, you can click on sync now, and that'll pull through straight away. If not, it'll just do that every single day for you. When it's then synced in, you can do some basic admin. It's always worth just highlighting by clicking on the settings. You can then go through and do some ordering and changing of accounts and all sorts, simply by just opening up the category and then using the options there. But we're going to be kind of concentrating on forecasting for COVID assistance. So for that, we're going to come to the forecasting tab here. So here we're then going to have a list of all of our clients that are connected up. So we'll then see if you've built one out already for them. So if you've already created a forecast, your two forecasts that might be created for them already. But if you don't, they're just all zeros. And we can then click new on that company to build out a forecast. When you first do that, these settings will appear. So we can then put in the default settings for that company. So we've got VAT here. So then we'll just put in the fact that it's quarterly, if it's just a kind of standard UK company. End of the current VAT return, 37 days after the period end is when we're going to be paying the VAT, normally a month and 7 days. 20% as our VAT default rate. So that will mean that the that Futrli Advisor will automatically look at VAT, account it for, build it into the forecast, build up that liability on a quarterly basis, and then pay it off accurately on that. So certainly VAT is something that Futrli kind of relies upon to be accurate, certainly in these times when data is so important and where forecasting is that much more of a need for a client to understand what the impact might be of deferred VAT or of a loan, for example. Ensuring that we've got accurate quarterly VAT, for example, is I think it's certainly important. So once you set them, it's nice and easy. Don't really need to handle it too much. Then on the right hand side, we've got our default accounts. So we can then simply click edit on the accounts receivable and then locate our accounts receivable. So my one in this company here was called accounts receivable, so it's obviously fairly easy. But you might have, for example, trade debtors or debtors control account, hence why we're just telling the system which is the correct one. I'm going to do that for all the others, selecting our default bank account, so the most commonly used bank account, and then our sales tax account, so our VAT control account there. Then we can hit save. And once you've done that, it is all done. There's no need for you to kind of build it out again. Unless you want to edit them, we click on settings. But if you don't, you can just click new and jump into building a forecast. So in this area, we then got a few options of which we can build a forecast out. So we've got the create from scratch option. That's a kind of like a blank canvas. We've got a CSV import. If you can, if you've got one already in Excel, maybe you've taken out a 0, or maybe your client's given you one, you can upload the forecast there. You can copy one as well if you've got one in Futrli and you want to copy it, or you can build one from last year's actuals. So use last year as a basis to then forecast forward. That's what I'm going to do with this case. I'm going to use the advanced create on last year's actuals. Here I'm going to give it a name, so I can just call this forecast COVID assistance. And then we can select a duration. So you could do a duration of the forecast anywhere up to 10 years, which is quite an ambitious forecast. But I think a lot of clients are, and certainly what I'm hearing, and wanting to know what's going on in the kind of the near future. So we'll leave it on the 2 years because, yeah, I think 10 years is a little bit too stretched at the moment when we don't really know what's going to happen tomorrow with all these changing kind of announcements and so forth, and furlough being extended like Rishi announced today. So I think having a close look on the short term, I think is probably a little bit more relevant right now. We then got the start date. So we can change the start date if, for example, the books are out of date and they're only up to date until August. You can change it here. We're going to leave it as November because this client is up to date and we've got actuals up until October. Then down here, we can apply some changes to our P&L, just as part of the setup. And what I'm going to do, because this client has been kind of affected by COVID, I'm going to drop income by 30%. So we're going to reduce it entirely based off last year. So that means January, for example, will be 30% down on the previous year's January. You can then do other changes, obviously, as you can see in here, to the P&L, but we're going to just leave it at that for now. And then click build. Cool. So there's our forecast built out already. Pretty quick, but certainly we're going to go in and manipulate it and add the extra features into there. So like I said, the Vat Deferment and so forth. But this is now our starting point. We've now got last year's P&L, but we've reduced income by 30%, and we've applied it to today's balance sheet. So looking at this 90,000 figure here, that's November 19th figure, but we've dropped it by that 30%. Everything else in the P&L is exactly the same as last year. And then we've got the balance sheet down here, which is today's balance sheet with the P&L applied on top of it. So really good starting point for us to work from. This is our workings tab where we could do all the kind of amending and so forth. But you can also look at the individual tables by clicking on the P&L, on the balance sheet, or the cash flow to view them without the other one. And you can open up the categories start to jump into what those kind of counts might do. So within the working tab, we see we've got the P&L and balance sheet down here. But what we're going to do for the first kind of input, we're going to work through the VAT deferment. So for that, we need to have a look at the cash flow tab, and we need to have a look at the amount of VAT that is due that we are then going to defer. So if we jump to the cash flow, we can then open up the receipts. We can then scroll down to where our VAT is sitting there. So we've got that in our receipts, 16,104 there. But if we then go down to our payments and scroll down again to our VAT, we've got 18,084. So if we then now find the difference between the two, what we're going to do is effectively put that difference and balance it out so it's cleared in that particular month, and then defer it to when we're actually going to pay that amount. So therefore, we need to effectively subtract the other figure, which is 16,104 from 18,084. So if we do that, that should then give us 1,980. So that's the amount which we're going to, like I said, balance off between the two. So if we now go back into our workings tab, and we then come down to our VAT account, which you can either scroll down here and like find it wherever it might be. But what I'm going to do is use the search function at the top here. I'm typing VAT and click on it, and it'll jump straight to it there. Then we can click on the plus to add in our forecast here. And then we can name the forecast here. You can leave it to default if you want to, but it's sometimes a little bit clearer, obviously, to name it. So we put it in here as deferred VAT. And we're then going to go down to the manual journal. So what we're going to do is take that figure, which I did write down because my memory is like a sieve, 1,980, but we're going to put a minus on that because we're going to effectively balance out that particular month. Transfer it to the current account. So we can search it by typing in the word there. And then that month was the month of January, which we need to put it over to here. So I'm going to put it for the end of the month there, so it clears the whole month there. And no repeat. Then we hit save. That's then going to calculate and put it in there. And now we'll see it within the workings here, but what I want to do is actually show you in the cash flow tab and go down to our month in question. So now we've got 18,084 there, and we've got the same amount in the payments there. So now we've netted it off. So there's nothing due in January now. We've just got a kind of reduced amount, is it netted off? And then we're then going to take that amount and pay it off in the month that it is actually due, the deferred amount. So if we go now back to our workings tab, we're going to search that VAT account again. We're going to click on the plus. We're going to use the manual journal. I'm going to get that figure again. I'm then going to pay it out in when we need to. In this case, I'm just going to put it to March. Obviously, I'm just using kind of example dates here, but certainly it's relevant, particularly on the company that you're working with. Just adjust the dates accordingly, but obviously the same principle applies. I'm then going to transfer it to our current account again. This time without the negative figure added in there. Again, no repeat, and then click save. Cool. That's then going to calculate. Again, we're going to put it in there, adjust all the figures accordingly, as you saw that kind of update there a little bit. But if we go back into the cash flow, we can then now see, again, to recap, in January, 18,084 is matching with the receipts. And we then got our payment there in 1,980 and nothing in the other one. So therefore, we've now deferred that VAT. As easy as that, just simply netting off the amount that's due, then transferring it to the month in question, as we can see here. Cool, so that is the kind of first one we wanted to work through, was deferred VAT. We've also got CBILS to work through. For that one, because it's a relatively meaty one, we've got an incredible step-by-step guide that's been built out, as well as an accompanying video. I know that obviously CBILS is going to be probably ongoing for a little bit of time. I think I will share you that guide. It's really easy to follow. Hannah has recorded a video accompanying it as well. So you can simply follow that kind of step-by-step guide, and that will get you up to speed with everything that is needed in the CBILS. What we can do now is a kind of a similar one, but a little bit more straightforward, is how to build in a bounce back loan. So for that, we're going to do a kind of a 50,000. So we're going to do the full amount. We're going to spread it over the 10 years maximum that we're allowed, and we're going to put that through using the loan wizard. So for this, again, we can scroll down. This time I'm going to do it because I'm not going to be lazy this time. I'm going to find the non-current liabilities, and we've got the bounce back account there. So I'll just add that in, which you would obviously do as well in your Xero or your QuickBooks account. You could put it to another loan account, but certainly it makes sense to put it against the relevant account. And we can then use the loan or amortization wizard here. So you see, whenever you're forecasting for any of the other accounts, we're going to have the other methods available. But when we then come into the non-current liabilities, we get this loan wizard available here. So here we can then put in the loan amount. So it's really straightforward, this loan wizard. It allows us to do all the kind of double postings and everything in one easy to follow way. So I'm going to put in 50,000 here. I'm going to put the APR rate at 2.5%, which I believe is the rate that's applied to all bounce back loans. I'm going to put the term as 120 months, so the full 10 years that we're allowed to do it. The account that tracks interest is going to be our interest account. See, the account that's going to be paid into for the 50,000 is our current account. You can change that. That's that default account that's working there based on those original settings. We're going to say that we received the payment right now, so 1st of November, but we're not going to repay that because we're going to have the first year of no repayments. We're going to start repaying it in a year's time. There's going to be no bank fees. We're not going to overpay yet, but certainly you could do other forecasts as well, being like, what happens if I do actually overpay at certain months and repay it? Really start to use that kind of what if scenario function, best case, worst case, to see the impact of that. We're just going to put in the kind of basic, I want the full amount spread over the full amount of time. What would the impact be of my company to have that? Click save. Cool. That's that whack through there. So now we can see the 50,000 now appeared in our balance sheet. It'd be in our bank account as well. But if we then skip forward, let's see to next year, we then see those repayments. But then we've also got, however, the interest. So if we go into this account, we've got our interest here, which is correct for that year. But we also have interest on that first year, which we don't want because it's a no interest period for that first year, I believe. Again, I've done a bit of research into the bounce back kind of full technicalities, so certainly correct me if I'm wrong on any of these areas, but I certainly do believe the first year is kind of free of interest and you don't have to repay anything. So for this, because it's an unusual sort of loan, we need to do another journal to counteract that first year of 103, which the loan wizard is by default putting in there. So for this, we are going to use a manual journal. We're going to click on the plus here. We're going to use a manual journal. We're going to put 103. We are going to start it the 1st of November 20. It's going to transfer to our current account. And we're going to repeat it monthly. It's going to finish after 12 months. So it's going to be the full first year. We're going to effectively reverse that interest, put it back into the bank, so we're not actually paying that there. And then click save. Cool. Now we can see that netted off. Working our way through, and we'll see that the same with the bank as well. If we open it up, we can then see our bounce back there, and we can then see our interest coming back in. So then it is the full amount that we get, and we're not actually paying off that interest until the actual time is right. So then that is effectively the bounce back loan, as close as we can get it, and I believe that's pretty spot on for what is required. So therefore, now within this forecast COVID assistance forecast, we have done a VAT deferment. We've discussed how we can do the CBILS, which you can certainly whack in there nice and easy with that guide. We've also put in the bounce back loan. So we started to put in those measures that your client might be able to take up, depending on what the impact might be. So now we can see maybe the impact by building out a quick report that we can send to the client to understand what these measures are going to do and how we can plan and kind of react to it. So for that, we're going to build it in a printed report. So we can build it as a live dashboard, which is really useful if you're speaking with a client over Zoom, for example. But maybe if you've got a client that's a bit more traditional, or you just want to send out a pack, have complete control, just send them the information that's required. And the printed reports is certainly a good feature. So we're going to build it from here. And then I can certainly attach then what we build to that kind of follow-up email. So you've got that as a example, really. So I'm going to click New Report. I'm going to start with a blank PDF here. I'm going to give it a name. I'm going to call this, let's go with the same name, Forecast COVID Assistance. And we're going to search for our company. I'm going to put the period ending to October, because what we're going to do effectively in this report, I'm going to look at like 1 month's worth of actuals of October, then forecast out from November moving forward. We're going to select our scenario. If you've got other scenarios, your default one will be the most recent one. So it'll be there, but you can certainly change it if you've made a few. And then click Confirm. Cool. We've then got our kind of basic settings there set up, ready to go. So now we can click the plus and we can open up the first page. So when we're then building up a page, we've then got a variety of different layouts on the right-hand side that we can select from. In this case, I'll just leave it like that. We can adjust it in a sec. But what I'm going to do down the bottom is use a template. So what I'm going to do is a profit and loss and a balance sheet page as a starting point. But then really start to elevate it with some extra visuals and extra information that we could put to that as well. So I'm going to search this for a profit and select profit and loss. I'll put it in as default as a chart, which is a lot of information to digest. I don't think many people present a P&L like a chart. So we're going to change it to a table instead. And then you can see the defaults has been added by putting on the period variances. Again, because we're just looking at a chronological profit and loss, there's no real need to have a variance. We normally have a variance if you're comparing like best case, worst case, and seeing the difference between the two. But in this case, we've just got the one forecast that we're working with. There's no need to have a comparison. So we're going to turn off that variance. Cool. And then if we go to our date range, we're going to click on Use Default Date. So that is that default date that we selected, being October. And we're going to change it to be following 11 months, and then change it to be forecast and actual data, selecting our forecasted scenario that we just built there. So then we've now got, as you can see, a 1 month of actuals, which is highlighted by that grey column. Then the forecasted scenario we just built called the Forecast COVID Assistance. And if we then go down, we can also shrink the table so it fits in the right space, because you can see that we've got kind of 12 columns plus the total, so it doesn't quite fit on that page. So we can open up the table cell width. We can then shrink it in just so we fit it however we need to. There we go, perfect. So that is the start of our report. We've got our profit and loss. We've got, like I said, 1 month of actuals, and then moving forward, we've got that the rest of the P&L to really understand what those measures are going to do to our company or to our client's company. So at the top, we can then start to add some visuals. We've got the kind of fundamental table to go alongside it, but we're going to add some extras into it. So we're going to click New Chart. I'm going to call this Income Analysis. And down here, I'm going to use the same date range. I'm going to change it to be in the data source, forecast and actual. So we're then going to have a, again, similar date range, so October actuals, then the forecast moving forward. So October, following 11 months. We'll update in a sec. There we go. We've now got that there. And if we go down to rows, we'll see income's there already, because it always loads with income. If there's something else, like we'll do in a sec, we'll delete income, put something else on. But for now, income's great, that's what we want. We're going to change it though to a spline, so it's like a smooth line chart. And we're then going to change it to be displaying maybe the group level. So there's two different income streams in this client here, and we can see that there. And then click done. That's now maybe our first page complete. We can obviously put extra visuals on there, like a cost analysis or whatever it might be. You can really start to kind of be creative. So in that case, maybe let's do that. Maybe let's change the layout to be this one. So we can have the P&L at the bottom, income analysis here. Click update. And then at the top right here, we're going to put on a new chart. I'm going to call this cost analysis. I put a little subtitle in here to be last month, because I'm going to change it to a proportion card, so like a pie chart. And then obviously we don't have an axis on the pie chart, so it's always good to have that subtitle in there. If we then go down to date range, we've got the last month selected there. We've got the default date of October. And we're then going to select the rows down here. So we've got income, but we're going to delete that in a sec, because we're going to click see all, so we can then now select what we want to put onto the chart. Cost of sales, expenses, other expenses. So all of our costs there. And then we're going to delete income. Cool. So now that's our kind of start point to our cost analysis. But similar to with the income analysis, we're going to change what is displayed. So rather than looking at the category of cost of sales, which is just like one chunk for the full amount of cost of sales, we're going to change it to be the group level. So then we can start to see what actual accounts are within that category. Cool. And we can then maybe change it to a different chart, which I just generally prefer, just a donut. No sugar, unfortunately, just a normal pie chart donut. But there, it's now looking nice and clean. And we're looking at the cost analysis for the last month. And then finally, let's rename that page profit and loss, rather than just called new page. Cool. That's our first page complete. And then if I then click save, there we go. And then also going to hit save at the top right here, because it's worth just saving as you go along. You don't want to lose any work. Cool. We're then going to add another page. So we're going to do our balance sheet page here. I'm going to click template. We're going to select balance sheet again. So similar to like we did with the P&L. I'm going to change it to a table again. Cool. And again, like the P&L, we're going to turn off those variances. Come down to the column formulas, turn off both variances. And then load in a sec. And we're going to go down to our data source, and we're going to select forecast and actual. So just actual obviously means it's just going to be looking at actual data. But if we want forecast and actual, so we've got that 1 month of actual as well as the forecast in the same table, we're going to select that there. And then go to our date range. We're going to select the default date, and we're going to do the following 11 months again. So the same as we did kind of throughout the report. Cool. So that's now our balance sheet. And we're going to go down to a table cell width, and again, just expand it out so it fits nicely on that page. Just we've got a nice professional finish to it. Cool. Now that's our balance sheet. We can now add some extra visuals like we did above. Whilst we're here, I'm just going to rename the full page, balance sheet. Cool. So in this case, I'm just going to do a kind of 2 sections to this page. Write the balance sheet down the bottom. And at the top, I'm simply just going to do bank balance over time, really. So we're going to click new chart. I call this bank balance. We're going to go down to our data source again. We're going to select forecast and actual. I'm going to the date range. I'm going to again select the same date range as I've done throughout, following 11 months. You could maybe do maybe a 2-year one. In this case, we have got a 2-year forecast. Simply build it whatever the client really wants. But certainly having something like this as a good starting point allows that customization once you maybe presented the report to the client and talked it through with them, and for them to really understand what is of value for them. And then we then go down to rows, because again, we've got income. We don't want income. We're going to search for bank. I'm going to select our bank account categories there. And then delete income as before. Cool. And then we can change the chart type by clicking on the little chart symbol here. And certainly, again, you can choose whichever chart type is relevant. I think in this case, I'm going to go for a spline area. Nice bit of shading. There we go. And then click done. Cool. That's now our balance sheet page done. So we're going to kind of sort of leave it there for the report. We've now got our P&L, we've got our balance sheet. Obviously, you just kind of add the extra charts that are required, or the extra pieces of information that your client really needs. But I'm going to click save on that. And then to finish off this report, I'm going to simply add in some pre-built pages by clicking on this. You can select cover sheet. This is a cover sheet, which you can then simply just edit. You can put your own logo in if you want to. If you do white label your account, your logo will be there automatically, and all the colors in there will be on brand. But you can certainly work it however you want to. You can change the title of the report, but we're going to leave it like that for now. And then we're then going to put in a executive summary. So when your client kind of first opens their pack, you can see what is in here. So for example, in here, we can then start to put in like COVID measures that you put in and whatever it might be. So we put in, for example, what did we do? We did Vat Deferment. We discussed CBILS. We put in a bounce back. We might also have furlough in there, for example. Really just allows that client to understand what is going on in that report. I'm just going to put 2 little stars next to it. Cool. Perfect. And then click save. And obviously, we don't want the client to kind of open the report back to front. So we're going to whack that over there. We're going to put the cover sheet to the second page and then hit the save. And that's the report all done and dusted. All we need to do now is click on print. That then kind of render the PDF as a PDF, which we can then simply kind of right click and save it, and then send it off to the client, whether you print it and post it or email it to the client, I imagine. And you can then set up a Zoom and talk it through with them. But that's kind of why a board might be good as well, because you can really bring it to life with them over Zoom, for example. But certainly you can do it this way, where we've got our cover sheet, got the executive summary, we've got our COVID measures added in there just so the client is aware. Obviously, you would change the text of the others. You wouldn't just leave it as give a general overview, but yeah, you would just amend that accordingly. You then got a P&L page, looking at those COVID measures that we've looked into to see the impact of the business moving forward. And we've then got our balance sheet page there, looking at the bank balance, and we've got the balance sheet there. Quite healthy bank balance for this client. So this should be a good client to work with, but certainly those measures that we put in there to really start to understand what the impact would be for that client moving forward. And just as a talking point, really, I suppose, to kind of understand what else they can do, what's around the corner, and how they can really pivot and react to it. Cool. That's pretty much it for today. I think a couple of questions did come through, so I'll kind of stop sharing my screen now, and certainly feel free to use the Q&A function, and I'll be happy to answer any questions as best I can, and we'll work through it. So the one question that came through was, is the forecast a full 3-way forecast? And yep, it certainly is. So as we saw, we've got the P&L, balance sheet, and cash flow. So it's a fully integrated 3-way forecast. So whenever you build out any item, it will be impacting the relevant area. By putting on the credit terms, could be impacting our cash flow. Obviously, we can then affect the VAT and our cash flow accordingly. So yeah, certainly it's not just a cash flow forecast, it's a kind of a 3-way cash flow forecast, of which we can then pull out any strings of kind of analysis that we want for that client, whether it's P&L, balance sheet like we did, or whether it's cash elements. Really, Futrli, I suppose, it's customizable for you to kind of build whatever is required for that client. Cool, that's pretty much the only question I think that's come through. So we've got a bit of time left, got 25 minutes, so loads of time. Oh, as always, when I wrap up, another question comes through. Cool. So Martin, thanks for your question. You've asked, how would you deal with a bounce back loan that's already been drawn down, i.e. the money has been received and we wanted to look at options for repayment? So using the similar sort of way that we did just now by putting in the bounce back loan coming in today. So even if you start a forecast as November start date, you can put the loan start date back in time, and you can then have a look at the kind of duration from there. So simply just change the start date, and you can then see the impact moving forward. You then maybe would build another forecast to kind of mirror that, but then maybe with a differing kind of repayment option, whether it be a different length of time, whether it be an overpayment to clear it off prior to the original term. So you then got the two working side by side. But yeah, certainly just putting it back in time at the start date and then changing the repayments for whichever scenario you're focusing from. So hopefully that answers that one. Like I said, I'll be sending a follow-up. So if you've got any other queries at the back of that, do let me know. Cool. Thanks, Martin. Perfect. So like I said, I'll send you the recording. I'll send you all the material, all the guides and everything I think will be useful. As always, you've got your account manager that's happy to help. But a lot of the time, the support team are really good to reach out to. So that's either via the in-app support messenger, little chat window that pops up really quick, or you can email them at support@futrli.com. So certainly if you're looking at, like, maybe you've put in a VAT deferment and it's not looking quite right, they can quite easily jump into your account, have a quick little look and help you out there. So certainly reach out to us if you've got any questions or anything that we can do. And yeah, I hope to see you on next week's session. As always, a week today, same time. I'll switch you then. Thanks a lot. Cheers then. Bye-bye.